One of the tenets of successful investing is all about diversifying one's portfolio. Especially for investors in India, we need to look at diversification beyond the India portfolio, which means you need to look at investing in mutual funds that invest in overseas securities, preferably securities in the US. But the current crop of collections that are happening on this is not very attractive. In fact, for the last 5-6 months, the total collection in this sector is only about 270 crores across all the funds as compared to almost 500 crores same time last year. So obviously collections are coming down. So is this a good time to buy into some of these funds? Plus, the tax structure no longer supports these kind of investments. So what should a common investor do? That's really the dilemma that we're going to explore today. First up, investments in foreign securities are subject to RBI approval. RBI has given an overall mandate to the mutual fund industry of investing up to $7 billion in overseas securities. Now, unfortunately, as of January 2022, this limit got capped, which means all the funds had collected almost up to $7 billion from investors. So they weren't able to collect more. So they started slowing down collection of these investments. They made lump sums difficult or not possible. They started resorting to SIPs as the only means, so on and so forth. In fact, some of the fund houses even stopped accepting investments into some of these schemes that did overseas investments. Now, over a period of time, of course, the regulators came back and said, as long as there were more redemptions happening and the valuations came down, they allowed for backfill, which means some of the mutual funds have since started accepting these investments. Now, investors can invest in some of these funds which invest in US NASDAQ or US S&P 500 and so on and so forth. Now, the question that we need to answer is that, is this a great time to invest in these markets? Couple of quick thoughts. Indian equity market is at a reasonable high. In fact, it reached the all-time high a couple of weeks ago, and since then it's been doing a little bit of corrections. Having said that, Indian economy is the top performing economy around the world, so it is attracting a lot of overseas money and domestic funds. So valuations, especially in the mid and small cap segments, appear a little stretched. So on account of this, there is a need for investors to look at diversifying their portfolio, especially into sectors which offer a better scope, which is where investing into mutual funds that invest into US securities makes a lot of sense. Having said that, the union budget in March dealt a huge blow to debt funds and international funds. Why so? It said that any investment in which the amount of equity is less than 35% is not subject to indexation benefit if held for a 3-year period. Till that point in time, most of these funds enjoyed a great tax advantage due to indexation benefit, and as long as they were held for 3 years, they gave a substantially higher post-tax yield because of indexation and lower tax rates. Now, unfortunately, that limit has been removed. So to that extent, yes, it is a negative for investors who are hoping to invest in these mutual funds that invest in foreign stocks. Having said that, is that the only reason one needs to invest in? That's the point we need to consider. Take a look at the table that we have enclosed where it shows the advantage pre-March and post-March. And that will give you a sense of the differential that one stands to lose if one made investments going forward. Having said that, I believe there is a very, very strong argument for starting to deploy some amount of your money into overseas securities, and this is why I feel so. First up, the US inflation rate is at its all-time high, and therefore to tackle it, the US Fed has raised interest rates to almost 7%. It's likely that there may be one more interest rate hike in the US, but that's about it. It's almost at a 40-year high now. Here and after, interest rates, even in the US, must start to moderate. And if that happens, then the US securities will generate a very, very good return. If somebody has a view of a 5-year period, then this may not be a bad time to take exposure on US securities using the mutual fund route. Second, Indian markets at an all-time high. So this is a great time to take some profit off the Indian market and look at deploying it into the US securities. Third, given that the US dollar appreciates at a rate of about 5% every year, as long as somebody invested today and stayed invested for a 5-year period, he would end up with at least 20 to 25% appreciation in the form of rupee dollar conversion. So to that extent, all these factors will make sure that an investor makes a much higher return at the end of the day. Of course, there are no guarantees. Mutual funds, as they say, are subject to market risks, but these are good bets and worth taking if you are an investor who is looking at a 5-year plus horizons. I'd strongly recommend you to explore some of these listed funds that are available, which in the recent past may not have given great returns, but if you have a 5-year outlook, I'm sure they can be a great diversifier to your existing India-only portfolio.